Good morning, traders. Today is July the 12th. My name is Neville Hornsey, market analyst with YouTrading. And today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing?
Yeah, I'm all right, man. I mean, we were just saying before we started this, I'm a bit down, of course. England didn't quite pull off the win. But to be fair, I've been trying to remind myself the fact that if you had said at the start of the tournament that we'd make it to the final, we'd be well happy. So I'm trying to see it in that context.
Yeah, I was having like internal monologues with myself, what I'd say if I was on that sort of press conference line of tour now. I'd be like, the biggest comeback would be, have any of you ever got into a final like that? And like everybody in that room or all the pundits be like, no, never done anything like that.
Yeah.
So, fair play to them. So yeah, they did it. They did us proud. But yeah, it would be nice if we were all up and bubbly.
Oh man, I don't know. Yeah, I don't even know if we'd be recording this video yet. We would have been partying probably.
Yeah,
as a nation.
Yeah, that was definitely the consensus of the people I was with. All right, so got a busy week this week.
We do.
Everyone seems to have something to say on the matter of central banks, or we've got US testimonies and things like that. So what do you want to start with? What's the key for this week?
Yeah, I mean, you already said it. Fed Chair Powell, he's doing his semi-annual testimony before Congress. I think basically there's two committees. I think it's like the Banking Committee and then like the Financial Services Committee on Wednesday and Thursday. I don't think most sort of analysts are expecting much new from Powell because we had the FOMC just under a month ago, and most are expecting that he will kind of reiterate the same kind of stuff he was saying in the press conference there. But any new hints on the timeline for tapering and potentially even rate hikes, although I doubt him saying anything about that, would be very interesting. But aside from that, I think we've got some other key US data points as well, like US CPI on Tuesday. That'll be interesting to see if the CPI spike has peaked yet. Probably has.
What do you think for core? Do you think it reaches 4% or whatever they're talking about?
I think it probably does. Yeah, I think it probably does. But like, how bond markets, long-term bond yields have continued to fall in recent weeks. I still think the market is very much buying into that Fed argument that inflation is going to be transitory. So I don't think, even if it is a bit higher than expected CPI, I don't think it should cause too much of an upset, to be honest.
Yeah. We've also got people like the Bank of Canada looking like they're going to sort of start tapering and things like that. So do you think the Fed still hold off for as long as possible, but other central banks start to, because the RBA could be considered to have started tapering. Bank of Canada definitely want to do more. Like, how do you see that happening?
Yeah, man. I mean, I think, like I say, Bank of Canada, that's going to be a key event. That's on Wednesday, their rate decision this week. They're expected to further reduce the pace of their asset purchases. They're definitely at the front of the queue or near the front of the queue in the G10 central banks when it comes to tightening policy. So, I mean, the question is this all already in the price of CAD now, though? Because CAD was a really strong performer for a long time this year, but now it's not been doing as well. And then, just whilst we're talking about the other central banks, RBNZ monetary policy decision also on Wednesday. They are, well, I mean, a lot of the, the Kiwi and the Aussie banks are calling for hikes to start there in November. Yeah. So, it could be quite hawkish.
All right. So it sounds like the commodity sort of based economies are trying to tighten, like at least with rhetoric and forward guidance. And I was just like looking at the currently looking at the QE versus the US dollar. That definitely looks like the New Zealand dollar is going to be coming down lower. It just seems to be like testing support over and over again at 0.695. And then like earlier, I was looking at the dollar CAD, and that's sort of compressing under the sort of daily 200 EMA. And for those that do look at chart patterns, I guess the cup and handle chart pattern is the most obvious, to sort of put here. And that looks like if this dollar can carry on going higher, then we could be going towards the 1.3 sort of mark. But you would have thought with, personally, I would have thought with tapering of Canadian or tapering of New Zealand sort of assets and currencies, that they would maybe strengthen. What would you say?
Yeah, I mean, I think it's maybe it's not so much of a case of tapering, because I think the outlook for the dollar is pretty good at the moment, which means the outlook for these pairs, is bullish for dollar CAD and probably bearish for Kiwi dollar. Yeah. Hawkish central banks, RBNZ, BOC, that could slow the move though, if you know what I mean. So if you look at the RBA, for example, out of those three, out of the BOC, RBNZ and RBA, they're the most dovish. So potentially you could see underperformance in the Aussie compared to the other two. And I don't know, there's also been quite a lot of negative news regarding lockdowns and stuff in Australia recently. So maybe that could play into Aussie weakness as well a bit.
Yeah, because I've got like the Aussie now like on the sort of screen, and the Aussie definitely, in the same way I was just saying about, the New Zealand dollar like testing that support, that type of feel happened a while ago with the Aussie, and it went back up, it tested the 200 and it came back down, and it looks like with this dollar strength that's coming through now, like especially today, these commodity pairs definitely look a lot weaker. But what else is on the agenda, do you think?
I think my next main thing this week in terms of driving macro sentiment, probably Chinese GDP data, and also they released like industrial production and stuff as well. Yeah. But they're like the first major country to be releasing Q2 GDP. That's going to be quite a big thing, especially as, in the last couple of days, there's been this pickup in talk about the slowing Chinese economy. You obviously had that 50 basis point cut from the PBOC and the triple R rate. Yeah.
So do you think they sort of front run a worse GDP figure, trying to sort of loosen monetary policy a little bit before?
I think it looks like they already have in a way. Yeah. I mean, GDP growth is still strong in China, but I think the worry is, I can't remember if we've talked about this before, but it's been going on for a couple of months now. The basically credit growth in China, that's been in decline for a long time. And that's a good lead indicator as to Chinese growth. So I think they're finally realizing that they've let credit growth shrink too much, and they want to get that back up.
But it seems like the retail sales were like super important as well for China, and they weren't sort of getting the figures that they want out of the consumer spending and things like that. So, and they want to transition more towards a sort of consumer economy, rather than being the sort of manufacturer of the world. So I guess they've got to do something.
Man, that's a good point. So retail sales is also out on Thursday. Chinese retail sales, that'll be worth watching too. Yeah,
because I don't know about you, but last week was a bit of a weird one for me, like watching the markets. I was trying to work out what the indices were all going to be doing, and it seemed like risk off like on Thursday and then risk back on Friday. And a lot of that risk back on Friday seemed to be attributed to the triple R rate from China being amended. So how do you think, what's going on?
I know it is confusing. I mean, when you take a bird's eye view of things and don't look too much into like the intraday sort of news headlines, China monetary policy is being eased, which is good for stocks. Yeah. In the US, the Fed, they might be slowly moving towards their hiking cycle, which might start in the end of 2022 or 2023. But long-term bond yields, which have been falling, are telling us that they don't think that the Fed, say the Fed does start hiking, bonds are basically telling us that they only think the interest rates are going to go back up to 1.5% or 2%.
Yeah, because we had run. What is it? Thursday we found like some resistance on the TLT, like the long bond, and then Friday there was that sort of relatively big drop, undone like a couple of days worth of price action. But the yields slightly picked up obviously on that. Do you think you're still like of the view then that bonds will get over this like little hump here and go a few more basis points higher?
I'm not sure, to be honest. I'm not sure for if you're looking at like the 30-year, I'm not sure. I mean, I expect that as we do move towards that Fed hiking cycle, shorter term bond yields should continue to rise.
Yeah.
And that could like support the dollar. But I think as long as long-term bond yields stay quite low, that should be supportive for equities, shouldn't it? Because it's, what's the saying, Tina? There is no alternative.
Yeah, exactly. Yeah. Okay.
Yeah.
No, it's just crazy. Yeah. So like if dollar's going up, I had oil sort of slowing, and that seems to have slowed. Do you think that's a reflection of, like the global economy worry now? Like, or, if GDP in China comes out slightly under expectations, does that put?
Yeah, I think this is actually, oil is less about that. And it's because these are kind of short-term oil contracts, aren't they? Like this is, this is oil futures for delivery in
probably September.
A couple of months away. So it's not really a long-term barometer. So it's not really, I don't think, is worried about China. I think this is more because of OPEC problems. Obviously, we haven't really had any news on that. They're still at loggerheads. And also potentially some concerns about the spread of this Delta variant, which is picking up in, various parts of the world that aren't very well vaccinated.
Yeah. Okay. So that's definitely a worry. And I guess next week we were talking about the UK lifting up restrictions on like face masks and social distancing and things like that. So I guess we become the test case for the rest of Europe and the world, maybe, is like what goes on. So overall then, like you're saying about the sort of big picture, the dollar seems to be strengthening, and that could be undoing a long-term trend to the downside. Is that what you're saying on the dollar? Yeah,
I mean, I think that long-term trend of weakening, I'm not sure that's going to continue. I think we could be in for consolidation / an upside bias. I mean, I don't see any explosive move because we had this explosive move to the downside last year. I don't think we're going to see the reverse to the upside, but we could see a gradual strengthening, definitely.
And then for things like equities, long-term uptrends, nothing in the pipeline really to sort of worry about that I can sort of gather. So it's just buy the dips, I guess.
I think so. I think we could, we could have some pullbacks, maybe even like a 10% pullback, just, based on short-term factors. But the underlying fundamentals remain pretty good, I think. Yeah. And then for the likes of the UK, obviously we didn't win the Euros. We've got no uplift in sentiment or anything like that. Yeah. But we've got Delta variant and the unknown of all this COVID stuff coming to pass. I was like looking at like IAG and like British Airways and things like that. They're having a bad day. So the miners, that's pulling down on the FTSE, and the German DAX started off weak, but is kind of flattened off today. So it's all right. So we'll just go with the trend, yeah? Yeah, I think so. Cool. All right. Well, fingers crossed this news that comes out gives us some direction and some trades, and I'll catch you next week. Nice one, mate. Cool. Have a good one. Bye. Bye.